What is Forex Trading? How do you even it? This is my 5 minute or so video where I'm gonna try to explain what I think Forex is, how to engage with it, and all of the above. At the end of the video as well, I'm going to try to take a trade using my own system, from my own creation, using trading replay mode and random feature in the replay. So, yeah, so what is Forex trading? This is my explanation, and I'm not going to go into heavy detail on what I think trading is. I'm just going to try to give a very, very brief and simple synopsis. So, trading is placing a trade on an asset in speculation that is going to either rise or decrease in value, right? Now, what are these assets? These assets, especially for forex trading, are forex pairs. So what is a forex pair? A forex pair is an asset that combines two currencies, currencies such as the US dollar, the euro, the yen, the New Zealand dollar, Great British pound, etc., etc. What a forex pair is are two of these pairs coming together to create a pair. So, for instance, there will be something like GBP, which is the Great British Pound against the US dollar. There could be USD JPY, which is the US dollar against the Japanese yen. There can be NZD which is the New Zealand dollar against Swiss franc. These come together and are traded against each other because their value differ. So you might have to pay a certain amount of New Zealand dollar to get a certain amount of Swiss franc. You might have to pay a certain amount of US dollar to get a certain amount of yen. I need to pay a certain amount of Great British pound to get a certain amount of US dollar. And that's what we're really covering. We're really covering the exchange rate of these different assets, right? So how do you make money? You make money by placing trades on speculation that these pairs, I mean, assets are going to either rise in value or decrease in value, right? Now, how you figure that out is widely speculated, widely speculated, right? People have strategies, as have I. People have developed pattern and algorithms, bots, and all kind, they have done all kinds of different things trying to uh, figure out the secrets, so to say, of how to figure out what is going to happen. My system, I believe, is very different to everyone else's because I don't use any of what I think everyone else uses, right? I basically try to just think about what thing is going to happen, right? I make mistakes. Obviously, I do use trades. I cover these things live, but for the most part, I do win. I do get it right. And in later part of this video, really hope if you watch till end, if I take the trade and I use it, I'm going to post regardless. Because that is one of the things that you have to get accustomed to when coming into this industry. You have to be okay with using it. If you're not okay with using it, if you're not okay with not always being right, this may not be the industry for you. That's just the reality of it. Now, basically, in trading, the entire, and this is my theory, right? The entire job description is you are paid to think. This is how I believe. I believe you're paid to think. I don't believe you're paid to look for patterns. I don't believe you're paid to trade a mechanical strategy where you just don't have to, all you have to do is look for this, and then once those things, those sequences happen, you can place a trade. I do not believe that that is how you do it. If you are doing it like that and it's working for you, kudos to you. I'm happy for you. But I have found in my almost 9 years of doing this thing, I have found that it does not work well, right? It just unfortunately does not work like that, right? So we're gonna hop into trading. You know, we're gonna use the replay mode. We're gonna use the random bar feature of that replay mode, which is where it's gonna put some simulation and allow me to. I'm not gonna know what's gonna happen, right? It's gonna allow me to be placed in a completely unknown to me scenario, right? And I have to try to figure out if it's going to buy, if it's going to sell, and what have you. So No cuts, no editing, none of that. We're gonna go straight into the simulation now, and we'll begin. So we're gonna go share screen, we're gonna go AVJPY, and let's begin. So we're gonna go replay. Okay, we're gonna go random bar. All right. So out the gate, AVJPY seems to be more bullish than bearish. Okay, yeah, right. And let's try to figure out what kind of market. So, okay, good. So as of right now, it is definitely more of a bullish market than it is a bearish market. And I'm looking at this. From here to here, it's been bullish. Now, literally recently, from since 2022, that's what September 2022 to present, to April 20, that's May 2023, it's been, but had some rejection to the downside. On the weekly time frame, you have that rejection being shown here, but now all of a sudden, you have over the last few weeks, it's been going bullish, right? And that bull move would be denoted by this. Now, the daily time frame is highlighting to me at this level. Now, why am I highlighting this level? Now, again, remember I said I don't really trade using any particular strategy or pattern or anything. I'm just trying to find out information that I think is important, right? So, looking at this is definitely an important. This is very poor. Okay, so we have a consolidation price broke out of that consolidation. Um, very right, price broke out of that consolidation, retested it, and is now going up. All right, so you have the retest there. Maybe you can also try to retest, or yeah, maybe here. Okay. All right, so let's see how price reacts to it. So it does not test that, does it? And I know I say that's interesting a lot, but what I'm really feeling when something is interesting is what is the reason why it never came to really take out these triggers? So let me play one more candle. All right. So I want to take a look at something. So what if I can take that over? What if 44 stop loss? Not the best, but not the worst. So let's assume I have $100,000 fund account. I want to risk 0.5% of that account. So I really want to be risking $500, right? 500 divided by 445 or 44.5 pips. That's 1.12 lots. So 1.12000. We're gonna go buy. We're gonna go stop loss here. We're gonna pull it and see what happens. Right? So test this, which is not ideal. Definitely not ideal. It came below here to take out the very level that I thought it would, but again, I'm definitely not happy with what I'm seeing. I do, yeah, I kind of saw that coming. I really did. And interestingly enough, it did indeed test the same level that I thought it would. Now, in this case, I took my loss. I'll take my loss. I'm content with that. It is what it is. Right? That's my $500 loss there. Let me play it a little bit more and see how it reacts. And if it does anything interesting. If it can get up here. This will be after a few days, obviously. So I lost this trade today. Let me see how it behaves in the coming days. Which means I would have been wrong about the buy regardless. Right? Okay. That is very interesting. So, which means the fact that it's coming down here means that I probably cannot engage with it until it can get above this. So I'm gonna play it on the 1 hour. Yeah, I'm gonna play it on the 1 hour, right? In hopes that it could eventually get back above there. I would not engage with this until it gets above that though. Right? Nice. That looks really pretty good. All right. Why don't I want to engage with this before it gets above here? Why didn't I want to do that? You see, because again, remember I trade momentum. So I thought this was momentum and it didn't move. Now I know that this is bullish momentum and EJ is a predominantly a bull market over the last 3 years. So let's see if it can react to this zone. That's my buy. If this does not buy here, I'll take my loss and I'll go my release. I feel like this stop loss is obvious. I feel like this is fine. 6 to 8 pips. Definitely not the best, but I'll take it. For example's sake, risking the same $500. And we're gonna go 6 to 8, 688.73. All right, so 73000. I'm gonna go buy. I'm gonna go stop loss. And if this stops me out, what's it gonna lose 2 in a row? This would have been after how many days, by the way? So it's not like I'm just randomly re-entering, and this is not revenge trading or anything like that. Because I took this trade on a Monday. It stopped me out on Tuesday, Wednesday, Tuesday, Friday, and on Monday I'm taking another trade. So this is I would not classify this as revenge trading because I definitely waited for something to happen. Let's see what happens. Not ideal, it's consolidating there, which suggests that it might try to take my stop. Not ideal. Definitely not ideal. Okay, all right, I'll take that. All right, so this is one high. See, so now I would need to clear this in order to move myself to break even. What? Up, up. Not yet. Good. So it's cleared this and cleared that, so my stock can now move to break even. And I think we are safe to be the neutral now. So now we're gonna move to here and clear out. Come on, don't blue ball me. Come on, up, up. So heavy consolidation, which suggests that it's probably gonna come down. It might try to come and take this. I would not be surprised if it tries to attack this. Let's see. Okay, that's good. It's really good. Clear that. So now I think if it says it did not attack this, I think I can move my stop. Maybe to here. Let's see. It needs to clear this. That's good. Stop can move to up here. Keep going. Stop needs to clear, or the price needs to clear this. Come on. Steady consolidate. Beautiful. Beautiful. So the next level would be this right up underneath here, because that's the next level that I feel is a threat. I've now secured not my money and then some, right? And it's clearing this consolidate. So now probably gonna try to attack. Where would it attack? This. I can see this being attacked. Good. Take that. So the target that was not attacked. Stop loss comes actually right up underneath there. Yeah, looking good. Price needs to clear here. Beautiful. Stop loss jumps. Not this, but this, because this is the last threat to my position right there. Looking pretty good. Price needs to clear this. No, no, not all right. Looking good. So it's definitely cleared that. The next threat would be right up underneath here. And by this point, look at how much I've secured. I've secured 1 to 3. The trade is already 3 times what I've risked. So even though I lost $500 in the first trade, I am now up in profit. Like, well, $1,000, right? So let's see. Let me clear that. And that's where it's taken out. We're taking out at 1 to 3, 3 times my risk. Even after what you're gonna do, right? I go home with, I believe that, I think, I wonder how much. So let's do a calculation quickly. Um, How much did I go with? It's actually not even gonna be $500 risk because uh, the fit value on yen, the AG, is gonna be different, right? So we're gonna have here 8,567 yen to United States dollars, $560. Now here's the thing. My original risk, if I can remember, was $500, right? So let's just see. It was, I think it was like $300. But in any event, you see here that I was able, after a loss, I was able to come out with a win, right? This is how you do it. This is how I do it, I should say. And I'm not perfect. I do get it wrong. I do make mistakes. I do lose, as you could have seen. I will be watching this video again. This is how I trade Forex. This is what Forex is to me. Have a good rest of your day, guys. Peace out. See you soon.